And this discovery is the one that is going to shock the most people. Because most people are assuming right now that when the strait reopens, oil prices come down, markets stabilize, the global economy begins to recover, the damage, significant as it has been, gets repaired. And that assumption is based on a fundamental misunderstanding of how the global energy system actually works and how long it takes to repair the damage that has been done to it. The Strait of Hormuz closing did not just stop oil from moving, it stopped the entire global energy logistics system. The tankers that move Gulf oil around the world are not a simple fleet of ships that can be switched on and off like a tap. They are part of an enormously complex global logistics network. Captains, crews, insurance arrangements, port scheduling, refinery intake planning, storage distribution, all of it, coordinated months in advance in an intricate choreography that keeps the global energy supply moving with remarkable reliability. When that choreography is violently interrupted, when tanker routes are suddenly declared war zones, when insurance for vessels in the region becomes prohibitively expensive or unavailable, when crews refuse to sail through waters where they might be targeted, the network does not just pause, it frays. The relationships that hold it together weaken, alternative arrangements are made, new habits form, and when the strait eventually reopens, the network does not simply resume where it left off, it has to be rebuilt. New insurance arrangements negotiated, new crew willingness established, new routing decisions made by companies that have spent months building alternative supply chains they are reluctant to abandon. Refineries that have restructured their intake to accommodate non-Gulf sources have made capital investments in that restructuring. Long-term supply contracts that were redirected during the closure are not immediately redirectable back. The energy logistics system is not a light switch, it is an ecosystem. And ecosystems, once disrupted at this scale, take years to fully restabilize. Which means that even when the Strait of Hormuz is technically open, even when ships can physically pass through it without being attacked, the full restoration of pre-war energy flows is not a matter of weeks, it is a matter of years. And during those years, energy prices remain elevated. Not at crisis levels necessarily, but elevated above what they were before this war began. Permanently elevated, because the risk premium is now built into the price permanently. Every tanker captain, every shipping company, every energy trader, every refinery operator now knows that the Strait of Hormuz can be closed, not as a theoretical risk, as a demonstrated reality. And they price that risk into every decision they make about energy logistics in the region forever. And I want to give you one concrete number before I move to the second discovery. Because abstractions about logistics ecosystems are easy to dismiss. Numbers are harder. The Marine War Risk Insurance premium for vessels transiting the Gulf before this war was approximately 0.05% of the vessel's value per voyage. During the Strait's closure, that number rose to between 1 and 3% per voyage, a 20 to 60 times increase. Even when the Strait reopens, insurance actuaries are not going to price Gulf transit risk at pre-war levels. They have new data, new demonstrated risk. Their models have been updated, and updated models produce updated premiums that do not reset, simply because the immediate emergency has passed. Higher insurance costs mean higher shipping costs, mean higher energy costs, built permanently into the price of every barrel of Gulf oil that moves through global markets. That is the mathematical certainty beneath the optimism of the reopening moment. The second discovery the world makes when the Strait of Hormuz reopens is the one that hits national governments hardest. The discovery of how much of their critical infrastructure, their economic security, their national resilience was built on assumptions that this war has permanently invalidated. Every nation that imports energy from the Gulf spent the past several months scrambling for alternatives. Emergency LNG contracts at premium prices, accelerated renewable energy deployments that would normally take years of planning and permitting, emergency strategic reserve drawdowns that have left those reserves significantly depleted, coal plant restarts that have been scheduled for decommissioning, nuclear facility license extensions that were politically controversial but strategically necessary. All of these emergency measures were expensive. All of them reveal vulnerabilities that those governments had known existed but had chosen to manage through optimism rather than preparation. And the moment the strait reopens, those governments face a choice that nobody is yet publicly discussing, but that is already being debated in every serious energy policy office in the world. Do we go back to Gulf energy dependence, accepting that this vulnerability has now been demonstrated to be real and that the price will include a permanent risk premium, or do we accelerate the transition away from Gulf energy dependence, accepting the enormous cost of that acceleration in order to ensure that we are never this exposed again? This is not a trivial choice. It is not a question of preference or political ideology. It is an existential question of national economic security that every energy importing nation on Earth is going to have to answer when the immediate emergency is over and the longer-term strategic calculation becomes possible. And the answer most of them are going to arrive at is the same. We cannot be this exposed again. We cannot allow a single shipping lane 21 miles wide, to be the choke point through which our entire industrial economy's energy supply passes. We have to build resilience. We have to diversify. We have to spend whatever it costs to never be this vulnerable again. And that collective decision, made simultaneously by dozens of major economies, is going to reshape global energy investment patterns, global industrial strategy, and global geopolitics for the next 30 years. The Strait of Hormuz reopening does not end that process. It triggers it. The third discovery, and this one is perhaps the most politically explosive, is what the reopening reveals about the GCC, about the nations whose oil made this crisis possible and whose security situation made this crisis happen. Because when the Strait of Hormuz reopens, there will be an accounting, a detailed, cold-eyed assessment by every energy importing nation of exactly how their dependence on Gulf energy created the vulnerability that this war exposed. And that accounting is going to produce a political conversation in Japan, in Germany, in South Korea, in India, in every major energy importing nation that the GCC has never had to deal with before. A conversation about whether Gulf energy is worth the risk it carries, whether the GCC's political instability, its proximity to Iran, its position in one of the world's most militarized and contested regions makes it a reliable long-term energy partner, whether the investment, the infrastructure, the supply chain dependence that ties importing nations to Gulf energy is an asset or a liability in a world where that dependence has just been demonstrated to be a single-point vulnerability of catastrophic proportions. The GCC has always sold its energy with the implicit promise of reliability, stable flows, stable prices, stable access. This war has broken that promise in the most dramatic way imaginable. And when the Strait reopens, the GCC will discover that it is selling into a market that has been permanently changed by what just happened. A market where buyers are actively seeking alternatives, where the political premium for Gulf energy has risen even as the practical appeal of it has fallen, where the implicit promise of reliability can never again be made with the confidence that it once carried. Dubai was built on the premise that the Gulf was safe, stable, and cosmopolitan. The investors and the wealthy residents and the international companies that built Dubai's economy believe that premise. This war has tested it, and the test results are not going to help Dubai's pitch to the next generation of investors who are asking themselves whether the returns justify the risk. The fourth discovery happens in financial markets, and it is the one that is going to surprise the people who are currently assuming that when oil prices come down, stock markets recover, bonds stabilize, and financial normalcy returns. Because the financial damage of this war is not primarily in current asset prices. It is in the recalibration of risk that is happening permanently inside every major financial institution in the world. Before this war, Gulf energy assets, oil company stocks, GCC sovereign bonds, Gulf real estate, the Gulf adjacent financial instruments that have been a significant part of global institutional portfolios for decades were priced on the assumption of stability, moderate geopolitical risk premium, acceptable volatility, worth holding as a diversified component of a global portfolio. That pricing assumption is gone. It will not return when the Strait reopens, because every risk model in every major financial institution is being rewritten right now in real time to incorporate the demonstrated reality that Gulf energy flows can be interrupted, that GCC security is not guaranteed, that American military protection of the region has limits. And when risk models change, asset prices change with them, not gradually, structurally, permanently. The Gulf's cost of capital, the interest rate it has to pay to borrow, the return it has to promise investors to attract their money has risen. It will not return to pre-war levels when the Strait reopens. The risk is now known. Known risks cost more to bear. That is not a market opinion. It is a mathematical certainty. And the financial consequences of that repricing across the entire ecosystem of Gulf-adjacent financial assets are going to be working their way through the global financial system for years after the tankers start moving again. The fifth and most consequential discovery of all is what the reopening reveals about American power. And this is the one that reshapes everything. Because the Strait of Hormuz closing was, among other things, a test. A real-world test of whether American military power can guarantee the security of the global energy system. A test that every nation on Earth has been watching very carefully. And what the test has shown, what the world now knows with a certainty it did not have before this war, is that American military power is real, but not absolute. That America can strike, can degrade, can impose enormous costs, but it cannot guarantee, it cannot ensure, it cannot make certain that a determined adversary with the right strategy cannot close the most important energy choke point in the world and keep it closed for weeks or months despite the full application of American military might. That lesson, once learned, cannot be unlearned. It is already being drawn into the strategic calculations of China, of Russia, of every regional power that has been contemplating challenges to American primacy. If Iran can do this, the question every challenger is asking is, what can we do? What vulnerabilities does the demonstrated limit of American military power now open for us? And those questions being asked in Beijing and Moscow and Pyongyang and Caracas and every other capital where governments have interests that conflict with American power, are going to produce strategic decisions and strategic actions that would not have been considered before this war demonstrated what can actually be accomplished against American opposition. The Strait of Hormuz reopening does not close those questions. It leaves them permanently open because the test has been run, the result is recorded, and the world has seen it. And here I want to give you a historical parallel that makes the American power discovery impossible to dismiss. The year is 1956. Britain and France launched the Suez Crisis operation, attempting to retake the Suez Canal from Egypt by force. America pressures them to stop, they stop, and in that moment, the entire world draws a conclusion that reshapes the next half century of geopolitics. British and French imperial power is over. If America says stop and you stop, you are not a great power. You are a client. That single demonstration, more than any other event of the post-war period, ended the British and French empires as operational realities and established beyond any doubt that American power was the singular organizing force of the global order. One moment, one demonstration, permanent consequence. The closing and the eventual reopening of the Strait of Hormuz is that kind of moment for American power, not its end. America is not Britain in 1956. America's power is vastly greater than Britain's was then. But it is a demonstration that American power has a limit that can be found and exploited by an adversary willing to pay the price of finding it. And like 1956, that demonstration will be studied, absorbed, and acted upon by every strategic actor in the world for decades to come. So let me bring all this together into the single most important thing I want you to understand about the moment the Strait of Hormuz reopens. That moment is going to feel like relief. Oil prices will ease somewhat, markets will recover some of their lost ground, political leaders will point to the reopening as evidence that their strategy worked, that the crisis has passed, that normalcy is returning, and ordinary people, exhausted by months of elevated prices and economic anxiety, will want to believe that, will be desperate to believe it. But beneath that relief, 5 permanent changes will have been made to the structure of the world that no reopening of a shipping lane can reverse. The global energy logistics system will require years to fully restabilize, keeping energy costs elevated long after the immediate crisis. Every major energy importing nation will have accelerated its transition away from Gulf energy dependence, permanently reducing the GCC's market power and strategic relevance. The GCC will never again be able to credibly promise the reliability that was the foundation of its energy market position and its own economic model. The financial risk premium on Gulf-adjacent assets will have risen permanently, increasing the cost of capital for Gulf development and reducing the attractiveness of Gulf investment. And the demonstrated limits of American military power will have opened strategic space for American rivals that would not have existed before this war. None of these 5 changes are reversed by tankers passing through a strait. They are the permanent structural inheritance of this war. The crisis that begins when the Strait of Hormuz reopens is not a crisis of supply. It is a crisis of reckoning. The reckoning with what the world has learned about its own vulnerabilities, about the real limits of the order that has governed it for 80 years, and about what kind of world is being built to replace it. That reckoning is just beginning, and it will be with us long after the oil is flowing and the headlines have moved on. And I want to leave you with one final image, because I think it captures what I have been trying to describe better than any analysis can. Think about what happens when a bone breaks and heals. The bone that heals is not the same as the bone that broke. It is denser at the fracture point, stronger in some ways, more calcified, less flexible. The break has been repaired, but the bone has changed. What it was before the break is not what it is after. The global economic order that has been fractured by this war, by the closing of the Strait of Hormuz, by the demonstrated limits of American military protection, by the permanent elevation of energy risk, by the acceleration of de-dollarization and energy diversification and regional supply chain nationalism. That order, when it heals, will not be what it was before. It will be denser at the fracture points, more calcified around energy security and supply chain resilience, less flexible in the way it was when cheap energy and free trade and American military protection made the whole system flow easily. The Strait of Hormuz will reopen, the oil will flow, the immediate crisis will pass, but the world that exists on the other side of that reopening is not the world that existed before this war began. And the people who understand that earliest, who begin adapting to the world that is emerging rather than waiting for the world that existed before to return, will navigate what comes next far better than those who mistake the reopening of a shipping lane for the restoration of the order that depended on it. Subscribe for more analysis of this conflict and its global consequences explained in simple English. And tell me in the comments, when the Strait of Hormuz reopens, do you think the world goes back to normal? Or do you think the permanent changes I have described are already locked in? I will see you next time.